Hello traders, welcome back. After a brief break, we are diving back into the Forex market with the latest technical analysis. Let's see what's moving the markets and what to watch for next. And of course, always with our main focus on harmonic patterns or advanced pattern formations in order to help us to decipher the next moves or try to anticipate the next moves in the market. Let's start with the Dixie. As usual, we start with the captain of the ship. I was tracking the possibility of a technical double bottom for Dixie. We have resistance at 103.54. It never happened. The price never break above that fractal level, and in fact we have a new fractal support, just invalidating that possibility to unfold into that specific pattern formation, the double bottom. I saw the price reacting to the golden Fibonacci level. We saw the technical double bottom, and we just need to expect or to wait for the violation of the resistance. If that happens, we should trigger, let's say we have a small trade position to the upside at this point, but only after a violation of the resistance. As I said, it never happened, so at this point we are already focused on another possibility, a move towards the golden Fibonacci extension level 101.30. That's the golden Fibonacci extension of the last swing high for the Dixie. I'm expecting an approach to that Fibonacci extension, and if that happens, I will expect some pressure to emerge from these levels. We have also the monthly support at 100.60. That's a previous monthly fractal support from last December. I will not be surprised at it in the midterm to see the Dixie approaching those levels. Actually in the midterm, in the short midterm projections for the Dixie. Let's move forward for the cable. We have also the bearish shark pattern 129.49. I always expect a retracement after completing this sequence. I'm not saying the price will reverse. Actually, the price may find some pressure as support and keep trading higher later, but I'm expecting a reaction to this golden Fibonacci level. We have also the 76% Fibonacci retracement exerting some pressure to the downside. Let's see if it is enough to trigger that retracement as expected for the cable. We have also some signs of bearish divergence for the fiber starting to emerge now that we are attempting to break above this daily fractal resistance level. We have already a new fractal. We have a new fractal at 110.47, and we are already threatening to break above those levels again. We have signs of bearish divergence, as I said, and we have also the bearish Gartley pattern, actually the bearish butterfly pattern projected a few weeks ago at 110.85. You can see this pattern, I believe, on a daily time frame. I projected that one a few weeks ago. 127% Fibonacci extension, 110.85, just a few points above the current price zone. So pay attention to this Gartley, this butterfly pattern. We have also the Aussie nice V-shaped recovering while I spent some days with the family on vacation. I saw this move, very fast move for the Aussie, and it unfolded into a kind of actually an inverted head and shoulders pattern formation, and we are already approaching the default target level 67.13. That's a 200% Fibonacci extension level. That's the default target for the pattern. One of the sequence that I'm paying attention to, and not only for the Aussie, we have also the cable may also unfold into cup and handle pattern formation if it decides to attack the weekly fractal resistance. Cup and handle weekly fractal resistance at 67.98. What a huge projection this pattern may offer for the Aussie if confirmed with a clear violation of this fractal resistance. The Kiwi already approaching the previous highs, the previous fractal resistance level 60.83, the daily fractal resistance. We have a new intraday resistance level at 60.86, just a few points above, so basically we're still threatening the violation of this previous fractal after the formation of this bearish shark pattern, as I called your attention last week. Nice pullback, approaching the default target level and completing the bullish 5-0 sequence, as some of you are already aware or familiar with, and that pattern offering another bounce towards the previous highs. Nothing to report for now. We need to see how the Kiwi will react from here. This pattern may unfold into kind of, this is a nice V shape as for now. It can unfold into kind of a double top, you know, just need to wait for a violation of the fractal support level. If that happens, of course, we will be here discussing that possibility, but nothing to report for now. The market can actually keep trading higher, eventually approaching this fractal resistance at 61.53, and there's no, let's say I have no pattern emerging for the Kiwi at this point. Aussie versus the New Zealand, in the opposite side we have the Aussie versus the New Zealand, with already with a couple, let's say with a projection for the bearish bat pattern already in my charts. I'm not sure if that will happen, but we are already approaching the, actually we are threatening the intraday resistance at 110.32. 110.57 we have the daily fractal. If the price breaks above this resistance, this sequence will, let's say that will increase the probability to print that pattern for us at 88.6% Fibonacci level. I will pay attention to this bearish bat pattern. Aussie dollar versus the Canadian, of course, we have already a bullish cipher pattern completed at 78.6, 136.60. I shared also this pattern before with you on Twitter. I will expect a reaction to the upside. Usually the market searches for 38% Fibonacci level, 137.67, and of course if the price breaks below this fractal support, will invalidate that sequence and eventually push the price much lower. So we have a bullish cipher pattern completed for the dollar versus the Canadian. For that move to happen, we need to see crude oil starting or keep moving lower, let's say following the recent momentum to the downside. We need to see crude moving lower in order to see the dollar versus the Canadian trading higher. That being said, this inverted head and shoulders pattern formation may not emerge, may not validate if that happens. But one of the patterns that I'm also paying attention to, and this will depend on a move to the upside, which means the dollar versus the Canadian will trade lower, invalidating the cipher pattern. So for that move to happen on crude oil, dollar versus the Canadian needs to trade lower, okay, or at least it needs to stay, moving sideways in a very tiny range for that to happen. So two options: the market will trade inverted with crude, or will move sideways while crude oil suffers moves to the upside. Okay, so that being said, patterns to pay attention to, price zones to pay attention to. $80.33, that's a resistance for the for crude oil. That's the neckline, let's say, for the inverted head and shoulders pattern formation. dollar versus the Norwegian krone, already approaching the default target level for the technical double top printed above. We have a broken neck at 8.84, that's so 10.84. We have default targets at 200% Fibonacci extension level 10.60. We have also the bullish bat pattern just a few points below 88.6% Fibonacci level, converging with the default target for the technical double top. So I will expect a reaction after forming that sequence to the upside. The euro versus the pound, also approaching the formation of a symmetrical projection or a projection, a symmetrical pattern, 84.97, 50% Fibonacci retracement level 85.02, and we have also the golden Fibonacci level at 84.74, converging with the moving average also pointing at the same price level, so some convergence with that moving average and the golden Fibonacci retracement level. This is what we may call an ABCD pattern. I will expect a reaction actually to the upside after completing that sequence. The euro versus the New Zealand unfolding into a potential head and shoulders pattern formation that will depend on the violation of the support level 1.8048. That's a default, that's a neckline, and the default target lies at 78.48, the 200% Fibonacci level, converging with or kind of a cluster or a box between the golden Fibonacci and the 200% Fibonacci extension level. Of course, as I said multiple times, always depends on the clear violation of the fractal support or the neckline to trigger that pattern. As we can see, we are also approaching the moving average with nice bullish momentum that may offer support for new move to the upside. If you search for opportunities to go long, eventually this support level it's also viable, but pay attention to the eventual violation of the support that should trigger a move, as I said, to the downside. And if you are searching for that opportunity to go higher with euro versus the New Zealand, eventually you need to wait a little bit longer to search for that price zone. The pound versus the Aussie, another one. Let me use the expression poised to move to the downside, eventually just to search for a new support for a move to the upside, or a big move to the upside, in my opinion, if the objective is to find some momentum. Eventually a clear violation of this structure, this consolidation, just to find a new support will be enough to trigger that move. And by the way, the shark pattern, as projected at 91.63, will search for the 50% Fibonacci retracement level at 96 or 1.96. That's a very interesting move to follow, to track for the pound versus the Aussie. Things must change, you need to see the price moving lower, you need to find support, and then you need to reverse with the momentum. Euro versus the Aussie, now threatening support levels, another pattern, or another, in this case not an advanced pattern, but another pattern that we should pay attention to. As always, we pay attention to the patterns the market print for us in order to apply a risk strategy to trade them. And in this case, we are also threatening the violation of the support or the neckline for this major head and shoulders pattern formation, and that pattern, that points to this previous support level. Default targets at 59.73. That's the default target, and that implies the the violation of the moving average, or the breakout or a move below the moving average. If the moving average is an element. It's an element to act as a pressure. In this case, as a pressure for support. If failed, eventually it will trigger a move to the downside. So if the moving average will do not exert some pressure, you know, you will see the price moving forward and falling into these previous lows. I will not say almost for sure, but usually when the market, if the market fails to hold above the moving average, in this case we are talking about the 200 moving average, of course, usually the market will be pushed lower. In this case I will point to the previous fractal support levels, which lies at 59.94. That's a previous support from June for the euro versus the Aussie. For that move to happen, so if the pair moves lower, the SPX500 will tends to move higher. So there's an inverted correlation between both. So for that to happen, if the pair keeps trading lower, triggering that head and shoulders pattern, we may see the SPX500 or equities being pushed higher, eventually searching for the golden Fibonacci level 58.66. That's ultimately the last squeeze higher for the SPX500, taking into consideration the Fibonacci ratios presented below. Of course, things may change over time, but taking into consideration the recent price moves, we can anticipate kind of a bearish alt pattern at 56.33, golden 113% Fibonacci extension level, or a push to the golden Fibonacci level at 58.66, and of course that will converge with that move to the downside for the euro versus the Aussie being pushed lower, with the SPX500 being pushed higher. Almost finishing, let's cover also the metals. We have also gold approaching or retesting or threatening, whatever you want to consider. We are threatening these resistance levels, so we have kind of a trend line resistance covering these highs and limiting the moves on metals, in this case on gold. We are threatening the violation of these previous resistance and also the weekly fractal level. So we have these weekly fractal resistance at 24.83. A new fractal was already formed at 25.10. So let's see if gold will be capable to remain above this weekly fractal resistance. If that happens, I imagine more upside momentum for gold. The same may happen for silver, which is far away from the previous or the historical highs, as you should know already. But pay attention on silver moving average right there, daily fractal resistance at 29.22. This is a 50% Fibonacci retracement level. The 61.8% Fibonacci lies at 29.70, and that's what we have for now for silver. Another pattern that may start to emerge, and that will depend where it will find resistance, but we have also a bearish crab pattern at $30.96, which may let's say reinforce the resistance of this previous channel for silver. Another price zone that I think we should pay attention to, and actually should pay attention first to this level. We have a nice cluster there between the 113% Fibonacci level and the golden Fibonacci retracement, so I think we should also pay attention to this potential price zone 29.58, 29.70. That's a bearish alt pattern completion point. and I think we should also pay attention to these Fibonacci levels. This cluster, it may be important. If the price fails to form resistance at these levels, then I will pay attention to these. And actually, there's another element right there. If you consider the channel, as we can see, there's something that spots on my eyes at this point. We have also the regression. Let me try the regression trend line in the middle of the channel, as you can see, and that's just another element putting some pressure for silver. So we have the regression trend line of the channel, we have the 113% Fibonacci extension, the golden Fibonacci retracement. So if the price fails to form a new fractal and a resistance, and of course which implies a pullback and a reaction to the pattern, if this fails, we may see a squeeze to the highs and the top of the channel again. As I said multiple times, the false breakout of the channel support may also guide us into a false breakout of the channel resistance. Okay, the same that happens below the support line of the channel may also happen above the resistance line of the channel. So pay attention to that possibility for silver. So that being said, only time will say what will happen, but I think this the first price zone that we should pay attention to 29.58, and if the price fails to hold or forms resistance right there, we should anticipate an attack to the weekly fractal and a move towards the golden Fibonacci level. Natural gas, another pattern that I want to share with you, eventual edge and shoulders pattern formation. Actually, I was checking this price action last night, and I was expecting the formation of the right shoulder, and today this move to the upside, and today's session eventually confirming that right shoulder. Let's see how the price will react. A move above the recent highs, we have fractal resistance at 2.29. A move above the recent highs eventually will trigger that bullish momentum for natural gas. Default target $2.61, golden Fibonacci level 266. That's also the default target. That's near the default target for the inverted edge and shoulders pattern formation. Now for today, I also, as I said initially, I bring also an ETF. This is uranium ETF. This is, let's say, a daily time frame. We approach at the golden Fibonacci level. I will not be surprised to see, kind of false break of the previous support and then a reaction to the upside, but this is a price zone to consider. Moves to the upside, eventually a retest or an approach to the previous resistance level from these levels will not be a surprise. Golden Fibonacci 22.44. That's where the bullish shark pattern completion point is now projected. So I prefer to wait for that pattern formation. So since the market fails the golden Fibonacci level, I'm not feeling comfortable at this point. I need to wait for another pullback, completing the sequence, eventually printing a false breakout of the support level, and then a move to the upside. So at this point we are only facing the golden Fibonacci retracement level. I need to see the golden extension filled in order to complete the shark pattern and to confirm the higher probability of that move to the upside. But that's something to track during the next sessions. Bitcoin and Ethereum, this is on a daily time frame. The time frame we saw this reinforcement of this channel support for the for Bitcoin. There's always something that can happen, of course, and that will always depend if the price breaks above resistance levels or breaks below the support levels, or unless the price is already printing something very specific for you. And this is not the case. We don't have a clear pattern emerging for Bitcoin, but there's always something that we can try to anticipate. The path of less resistance relies to the downside while below the moving average. This is a 4-hour time frame chart. While we still below the moving average, I consider more downside momentum for Bitcoin and Ethereum. If the price breaks above the moving average, which will imply most surely the violation of the resistance. We have resistance at 61,800, so if the price breaks above that fractal, that will imply also the violation above the moving average. But if that happens, we should pay attention to the formation of the bearish bat pattern 67, 69 or 694, let's say. 88.6% Fibonacci retracement level. If completed, I will expect a retest of the daily resistance again, so I will expect a pullback. And that's the only thing that I can project or try to anticipate for Bitcoin, and that's considering the most recent price move. Okay, so just considering these first 3 moves, and that may change if the price breaks lower, if the price breaks higher, and then suddenly breaks it down again. So everything can change, but take into consideration, and that's always that's always my point of view. I always take into consideration the most recent moves in the market in order to try to anticipate the next pattern. And things, as I was trying to say, things can change in a couple of hours, and sometimes in a couple of minutes. Everything can change, but take into consideration the recent ratios at this point. I can try to anticipate that pattern if the price breaks above the resistance. Nothing more to say. The price keeps being pushed lower, so the path of less resistance lies to the downside, larger consolidation period. The same may happen for Ethereum, which it's already trading below the channel support, and it looks like it's struggling to recover. As you can see, we have this trendline support, and Ethereum is showing resilience to recover above that previous support. In fact, one of the patterns that may start to emerge on Ethereum, and this is much clearer than on Bitcoin, it's an head and shoulders pattern formation. We have the left shoulder, we have the head, and eventually the right shoulder. So if the price breaks below this support level, we have support at 25.21. That opens the door to more downside momentum for Ethereum. So that being said, that finishes my video for today. I hope you enjoy. Of course, I will update some of these patterns and charts over the next days and over the week. I hope you enjoy and take some valuable information from the content that I share. And of course, as some of you already know, and you are already familiar, I'm also a team member at Forex Analytix. So if you want to explore the tools and the platform and the service that we provide to all kind of traders at Forex Analytix, you have the links in the description below. Make sure you visit the project. Actually, you can test the project for a couple of days, or for $1, I believe. So just a very residual values, just for you to test the platform and all the tools at your disposal. And I hope you enjoy also the project and the people there, which is a very experienced, let's say, very experienced community with a lot of people trading the markets for more than 30 years and even more. So altogether we have thousands of years of experience sharing all with each other. So I invite you to join the team and the project there. So make sure you visit with the links below. So that's all for today. I hope to see you in the next video.